Good morning everyone. Welcome to my YouTube channel Learn CMA with Pavithra. Today I will solve one more problem which is in the material provided by institute. Before that, let's read the problem. The trial balance of a business is given below. Returns 25,900 in debit balance and credit balance 10,900. Discount received 5,200. Sales 6,12,700. Commission 11,500. Bills receivable 60,000. Carriage inward 14,900. Plant and machinery 85,600. Investments 22,400. Sundry creditors 40,000. Salaries 15,500. Freehold premises 1,05,000. Drawings 5,300. Capital 1,50,000. 6% back loan 20,000. Purchase 3,40,000. Reserve 75,000. Wages 65,800. Discount allowed 6,500. Sundry debtors 85,800. Freight 12,400. Bills payable 44,800. Furniture 48,600. Carriage outward 15,200. Opening stock 35,900. Cash at bank 24,700. Cash in hand 1,600. Provision for doubtful debts 1,000. Here we can notice there are direct expenses, indirect expenses and assets and liabilities. So based on this information we have to prepare the financial statement, that is trading account, profit and loss account and the balance sheet. Here we can see the first item they have given is returns. Debit column they have mentioned 25,900 and credit column 10,900. So we should know which is purchase return, which is sales return. Return which is there in the debit column is sales return and which is there in the credit column is purchase return. The next 6% bank loan they have given. Amount is 20,000. On this 20,000 we have to charge 6% of interest. The rest everything is clear. Let's read the adjustment. Prepare trading account and profit and loss account for the year ended 31st/12/2017 and the balance sheet as on that date after taking into account the following adjustments. The first one, the market price of the closing stock is 1 lakh which includes a profit margin of 15,000. So the market price is 1 lakh, cost price is 1 lakh minus 15,000. This is the profit margin. When we are going to sell the product, we include profit margin also. So if we remove that profit margin, we will get the cost price. So cost price is 85,000. Now while considering the closing stock for the calculation, always we should see that market price and cost price, whichever is less, that amount we need to consider. So here 85,000 is the least amount. This amount we are going to consider for the calculation purpose. Second one, outstanding liabilities for salaries 4,500 and for wages 9,800. Outstanding salary and wages should be added to the respective expenses in the P&L account and only outstanding amount is written on the liability side of the balance sheet. In this adjustment, it is already clearly stated that outstanding liabilities of salary and wages. So, we have got the answer that it should be posted on the liability side of the balance sheet. What is the meaning of liabilities? Any kind of financial obligation that a business has to pay at the end of an accounting period to a person or a business. In simple words, we can say that the state of being legally responsible for something. So outstanding salaries and outstanding wages we are supposed to pay, we have not yet paid, but the company has already enjoyed the benefit. So this is liability for the business. Third one, depreciate furniture by 15% and plant and machinery by 20%. So what is the meaning of depreciation? Depreciation is the reduction in the value of an asset due to various reasons such as wear and tear, regular consumption, passage of time, etc. Depreciation on furniture should be calculated and also plant and machinery on the value of the respective assets. Let's calculate the depreciation amount. Value of the furniture they have given 48,600. On that we have to calculate 15%. Furniture depreciation amount is 7,290. Next we will calculate it same thing on the plant and machinery. The value of the asset is 85,600. So the depreciation amount is 17,120 for plant and machinery. The depreciation amount of furniture and plant and machinery should be debited to P&L account and it should be deducted from the respective assets on the asset side of the balance sheet. Next one, sundry debtors include 1,800 as bad, which is to be written off. This calculation I'll come back later. Next one, create a provision for bad debt at 5% on sundry debtors. It is also related to fourth one. Sixth one, goods distributed as free sample, 500. So this amount should be deducted from purchasers as there is a reduction in the number of stocks, and also this should be debited to P&L account as marketing expenses. Next one, goods lost by fire 20,800 and insurance claim admitted for 16,000. Goods lost by fire is an abnormal loss which may happen accidentally or due to negligence. This amount is added to closing stock in the trading account. The difference amount of goods lost by fire and insurance claim to be debited to P&L account. The difference amount we need to calculate 20,800 minus 16,000. So the difference amount is 4,800. This 4,800 amount should be debited to P&L account. And also insurance claim admitted 20,800 should be shown on the asset side of the balance sheet. Next one, goods drawn for personal use. This is drawings. The proprietor has been used the goods for personal use. So this should be deducted from the purchases and also this should be deducted from net profit in the balance sheet. Next, commission received 1,500 is yet to be earned. It is income received in advance. This amount to be deducted from commission on the credit side of P&L account and also it should be shown on the liability side of the balance sheet. I have left one adjustment. Let's see that now. Fourth one, sundry debtors include 1,800 as bad, which is to be written off. And the fifth one, create a provision for bad debt that is at 8% on sundry debtors. So we'll calculate now. Before that, we should know some basic information. When old provision and bad debts are given in trial balance, new provision for bad and doubtful debt is given in adjustments. In this problem, old bad debt is not given, but old provision for doubtful debt is given and new bad debt is given and new provision for doubtful debt we need to create. Let's calculate now. In this problem, the information whatever they have given is matching with this criteria, but only thing is old bad debt is not given. So what is the treatment? Let's see that. If the total of old bad debts and new provision higher than the old provision, then the difference amount is debited to P&L account and in the balance sheet only new provisions are deducted from debtors. Or if the old provision is higher than the total of old bad debts and new provision, then the difference amount is credited to P&L account. In the balance sheet only new provisions are deducted from debtors. So we need to see what is the treatment we need to pass, whether we need to debit or credit to P&L account. Let us write down the information whatever they have given in the problem. Old bad debts they have not given. Let us consider it as 0. Old provision they have given, that is 1,000. New bad debts amount 1,800 which is given in the adjustment, that is fourth adjustment. Next, new provision at 5% they have asked us to create. So we need to calculate. How to calculate? To calculate the new provision, we require sundry debtors amount, that is 85,800 From that amount, we need to deduct new bad debts, which is given in the adjustment, that is 1,800. So let's see the difference. That is 84,000. On this 84,000, we need to charge 5%. Let's calculate what is the amount. That is 4,200. 4,200 is the new provision. Now, we have written down all the information from the problem after calculating new provision. Let's calculate and let's see which criteria it is matching. If the total of old bad debts and new provision higher than the old provision, then the difference amount is debited to P&L account. Correct? Or else vice versa. So let's see. Old bad debts they have not given, that is 0. New provision 4,200, and so the total is remains the same 4,200 as old bad debt is 0. Next, old provision they have given in the problem, that is 1,000. So here we can see old provision is lesser than the total of old bad debts and new provision. So let's read now. If the old provision is higher than the total of bad debts and new provision, then the difference amount is credited to P&L account. But here we can see that total of old bad debts and new provision amount is higher, that is 4,200. So now we need to calculate the difference amount of 4,200 minus 1,000, that is 3,200. This difference amount should be debited to P&L account, because if the total of old bad debts and new provision higher than the old provision, then the difference amount is debited to P&L account. Correct? In the problem, whatever they have asked or whatever the information they have given, that criteria is matching the first one. Correct? That is the reason we need to debit it to P&L account. Hope now all the adjustment is clear. Now let's start solving the problem. So format remains the same. Now let's start solving the problem. First, opening stock. First we have to prepare trading account to opening stock. Opening stock amount is 35,900. Next, to purchases 3,40,000. For this, certain adjustments are there. One is purchase return and free sample. So now we need to see which is the purchase return. Whatever the amount given in the credit balance, that is purchase return. The amount is 10,900. Goods which is distributed as free sample should be deducted from the purchases. The amount is given in the adjustment, that is 500. Next, one more adjustment we need to deduct from this. Drawings, the amount is 2,100. 2,100, which is given in the 8th adjustment. The difference amount we need to write it on the outer column. Next, let's see what are the direct expenses they have given in the problem. Wages, amount is 65,800. There is an adjustment. Outstanding wages should be added to the respective expenses. 9,800. Next, to flight they have given 12,400. Carriage inward 14,900. So these are the direct expenses whatever they have given. Next, move on to the credit side of the trading account. First, buy sales. Amount is 6,12,700. Next, minus sales return. Amount is 25,900. Balance is 5,86,800. Next, buy closing stock 85,000. There is an adjustment. Add goods lost by fire 20,800. So both the side, let's see the total. We need to see which is highest. As we can notice here, credit side amount is highest compared to debit side. So both the side we need to enter the highest amount. So let's see the difference of amount. So the difference amount is 2,27,300. This is profit for the business. To profit and loss account, in bracket gross profit transferred. So now we have prepared trading account. Next we will move on to profit and loss account. First thing, this gross profit we need to transfer to P&L account by gross profit carried down. The amount is 2,27,300. So while entering profit and loss account, we will consider all the indirect expenses and income. Let's see, discount received 5,200. It is an income for the business by discount 5,200. Next, let's see, sales, it will come under trading account, we have already done. Next, commission, it is written on the credit column, so this is income for the business. And also we can notice there is an adjustment for commission. Amount is 11,500. Now let's see the adjustment. Ninth adjustment they have given, commission received 1,500 is yet to be earned. We have not yet earned, but we have received in advance, that need to be deducted from the commission. Less amount is rupees 1,500. Bills receivable asset, carriage inward will be direct expenses and carriage outward will be indirect expenses. Investment, syndicate creditors, salaries. Next, salaries to salaries, and there is an adjustment related to salaries. Amount is 15,500. Add outstanding salary, it is 4,500. And here they have mentioned 6% bank loan. They have not given any adjustment related to that, but next to bank loan they have mentioned 6% of interest we need to charge, that is to interest. Bank loan amount is 20,000. 20,000 into 6 divided by 100. We should assume that the loan has taken in the middle of the year, so for 6 months we need to calculate the interest. 20,000 into 6 by 100 into 6 by 12. So the amount will be 600. Next we have discount allowed 6,500. Next, carriage outward 15,200. And also we have calculated related to bad debts and provision for bad debts. Whatever the amount need to be debited to P&L account, that will enter now. As we have already calculated, let's write the amount of new provision, 4,200 less old provision. Old provision amount is 1,000. The difference amount 3,200 in the outer column. So till now, whatever the information available in the particulars we have written. Now let's go to adjustment and we'll make the necessary entries. So first one, it is related to closing stock, which is already entered in the trading account. Second one, outstanding liabilities for salaries and wages. These two entries we have already done. Third one, depreciate furniture by 15% and plant and machinery by 20%. This we have not yet entered. Let us enter. So depreciation on furniture, this we have already calculated, that is 7,290. Next, depreciation on plant and machinery, this also we have calculated. The amount is 17,120. So fourth adjustment, sundry debtors include 1,800 as bad, which is to be written off. That needs to be debited to bad debts. Amount is 1,800. Next, goods distributed as free sample 500. This is advertisement expenses. Let us enter it as 2 advertisement expenses 500. Next, Goods lost by fire, as I said earlier, the insurance claim and the goods lost by fire, whatever the difference amount is there, that we need to debit it to P&L account. To abnormal loss, bracket 20,800 minus 16,000, that is 4,800. Whatever the adjustments are related to P&L account, we have done the entries. Now we'll see which side is higher, whether the debit side or the credit side. So this is 77,010 rupee on the debit side, and on the credit side balance is 2,42,500. So whatever the highest amount, that we need to enter on both the side. Let's see the difference amount. 2,42,500 minus 77,010 rupee. So the balance amount is 1,65,490. This is net profit to capital account. So again, in the profit and loss account also, credit side amount is higher, which is income. Income is higher than the expenses, so it is a profit for the business. How to prepare balance sheet. Capital amount is 1,50,000. Add net profit. Amount is 1,65,490. Less drawings. Drawings amount they have given in the particulars 5,300, plus in adjustment also they have mentioned that goods drawn from personal use 2,100, that also we need to deduct here. So that is 7,400. Outer column 3,08,090 rupees. Next we have reserves. Let's check whether they have given reserves. Reserve 75,000. Next we need to enter all the current liabilities. One by one we will see. Sundry creditors 40,000. Bills payable 44,800. Next outstanding liability. Outstanding liabilities they are given in the adjustment also, that is salaries and wages. Outstanding salary amount and outstanding wages. Salary 4,500, wages 9,800. Next We have 6% bank loan of rupees 20,000 and also interest we have not paid, that is 600. This amount also we have already calculated, and we can see in the P&L account commission we have not yet earned but we have already received, that is prepaid, sorry, income received in advance, that we need to be enter on the liability side because we have already received. $1,500. These are the items which we need to enter on the liability side of the balance sheet. Now let's see what are the assets we have. First we need to enter all the long term or fixed assets. Plant and machinery, $85,600 minus depreciation, $17,120. Next, investments, 22,400. Next, freehold premises, 1,05,000. Next, furniture, 48,600. Minus depreciation, depreciation on furniture amount is 7,290, which is already written on the, which is already debited to. Depreciation on furniture amount is 7,290, which is already debited to P&L account. All the long-term assets has been entered. Now all the long-term assets we have entered. Now let's see what are the short-term assets or current assets. Now let's see what are the current assets. Bills receivable, 60,000. Sundry debtors, 85,800. From this we need to deduct new bad debt. That is 1800, and also we need to deduct new provision for bad and doubtful debts. Amount is 4200. And we have cash at bank 24,700. Next, cash in hand. Amount is 1,600. So in the particulars, whatever the information given related to assets we have entered. Now let's see in the adjustments. Here we need to enter closing stock. We will consider cost price, that is 85,000. Next, outstanding liabilities, the second one we have entered, third one done, fourth one done, and fifth one is also over. Sixth, free sample over. Goods lost by fire 20,800 and insurance claim admitted for 16,000. For this insurance claim admitted 16,000, we have passed only one entry in the P&L account, correct? So one more is pending, that we are going to show on the asset side of the balance sheet. Insurance claim 16,000. Now both the sides should tally, otherwise if it doesn't tally, the problem is wrong. Let's see. Five lakh 4,290 on the asset side. Five lakh 4,290 on the liability side also. That means our problem is right. Hope you have understood the problem. If you like the video, please like, share and subscribe. If you have any queries, you can comment. If you like the video, please like, share and subscribe. If you have any queries, you can ask me in the comment. Thank you for watching my video. If you like the video, please like, share and subscribe. If you have any queries, you can ask me in the comment section. Thank you once again.